all, I hope you are doing well in these unprecedented times, because we have not used the word unprecedented enough recently. Welcome to the Fintech Finance Virtual Arena where we're hosting you today. Today, we're going to be talking a little bit about regulation, regtech and lawtech. I'm very pleased to be joined by, man, I often see at various events, Robert. How are you doing today, Robert? Whereabouts in the world are you?
I'm good, thank you. And I have to say, unprecedented times should apply really to the US elections. It would be good if the US was unprecedented at the moment.
Oh, I like that. Yeah, I'm very curious what's going to happen with that, because there's so much conflicting reports. Like I was looking at things like who's the best for the stock market, and you can find well-renowned publications say putting forward the case for either party. It's a definite nail bite at this one.
But the age of the candidates, I don't even understand how you can have a 74 and a 78-year-old fighting it out for the presidency of one of probably the biggest superpowers in the world. I mean, it's crazy.
It's Michael Moore said, and this is pre-COVID, so obviously it changed. He said there's only one person that could beat Trump at the next election, and she's not running. He was referring to Michelle Obama.
Of course. Yeah, so you got a lovely view of my conservatory here where I'm sitting, which it's been a nice place. I've been here pretty much non-stop since March. Haven't left that much, and yeah, I'm doing a lot of stuff in the industry still. Working a lot with the EPA on a lot of the reports. They're going back on the surveys that are coming out of FCA, HMT, PRA, PSR. There are lots and lots of like, what's the future of finance looking like? What's the future of payments? And it's coming at all angles, and there seems to be a lot of requests from regulators at the moment and governments on what they think is going to happen next.
Obviously, we got to talk a little bit around we have to talk around payments and obviously some of the work you've been doing recently. Of course, absolutely. You got the book, and that was one of the last events before lockdown that I saw you at.
The last thing that happened before lockdown. You're right. It was crazy.
Absolutely, it was, and yeah, I don't think anyone there was spreading it, but that would definitely have been a super spreader event if there was.
I can't believe. I mean, they're saying 20% of Londoners have got it. I think probably more. Those packed tubes from December through March that I was getting on every day, where you're in people's armpits. I mean, I can't believe you didn't pick it up from there. People were coughing, spluttering because it was winter. I think probably a lot more people had it than no, and if one day we do actually all get tested to see if we've got the antibodies, I reckon probably 50% of Londoners should have it.
I'd love to see that data. Looking at the external factors of things like the virus, and obviously some of the work you've done with the EPA recently, what trends are we seeing in payments at the moment? What's the big thing?
The obvious one is the rise in contactless and online payments, the growth of the sort of Amazon and supermarket delivery services, Deliveroo type services, where people are spending a lot more of their disposable income on goods being delivered to their homes rather than actually going out. There is still that fear factor of actually even leaving your home. There are people that don't want to leave their home. I mean, I have had a few trips into London recently, and you go around London, it's like a ghost town. So I think there is still a lot of resonance for leaving the home, and if they do leave the home, they don't want to touch anything. So everything's got to be contactless. There's a fear of even touching a pin pad, and this sort of overzealous use of sanitizers. It's quite an odd space out there, but it has obviously given some benefits and some burdens into the payments industry. The benefits have been online payments. I think there's been a rise in those, and contactless payments, which has just gone through the roof. I think there's been a decline in cash over this time, which through a lot of the work I've been doing with UK Finance on their Project Futures work is concerning, because there are parts of the country where it is difficult to get hold of cash, and the ATMs are being withdrawn because they're not making any money for the providers. And so you have rural areas and places like that where there's not a lot of internet, people can't get online, and it is difficult for the people that find it difficult when there's no cash around. And so I think the benefits of reducing cash in society are great, provided there's an alternative. And I think that alternative is not available yet. I think the alternative we're looking at are things like CBDCs and stable coins coming through, the central bank issued digital currencies that we're seeing, but they're still in the distance. I mean, China has got a program that's kicked off. Sweden is probably the most advanced in Europe. But then you look at something like Tether, and that's growing by like 1.5 billion every 2 weeks in its volumes. And that is probably the most universal stable coin in the market today. It's got about 90% of the market at least. And so there is clearly a use for those sort of coins in the marketplace where they would be used for more in the payment space. Whereas people taking Bitcoin, you take it as an investment. You're not using it as a payment means normally.
Absolutely, except for if you've got a big stock of Bitcoin and you use your PayPal account now.
Well, PayPal going into Bitcoin, I mean, the Bitcoin price gone up to 2,000 in 2 days since they launched that, which is crazy. They think the amount of usage of Bitcoin will go up as a result of it, 2 to 3x, not 2 to 3%. That's a massive jump in usage. And I think, and they're looking at other purchases as well. I saw in the marketplace. So I think the advent of probably one of the largest payment companies for general payments to go in that route, which is for the general consumer payments, to move into the crypto space, is a massive step forward for cryptocurrencies as a whole. But I still think that the ones that will make it will be the Tethers of this world, the stable coins initially, but then the CBDCs are the ones that are going to be the ones that everyone wants to have. They're 100% backed by the central bank, so you don't need a deposit protection scheme when you've got 100% protection of your currency. And secondly, it begs the question of what the banks are going to do in those circumstances. Because at the moment the banks obviously make their money on deposits, and deposits need to be in cash for them to be able to leverage it and lend it on. You can't do that with a CBDC. It is inert. It is what it is. They can hold it on your behalf in a secure manner, but your access and egress from it will be through your own wallets. So I mean, they're accessible to everyone. So it's going to be interesting to see how that whole market develops.
Got to ask, on the subject of Bitcoin, do you think John McAfee is going to have to, at the end of the year, as he signed, going to have to surgically remove his penis if Bitcoin doesn't reach 100k?
I think that is, he will always say that is a puff, a mere puff. It's something that he did to raise awareness of it. I very much doubt that anyone would go through a surgical procedure if a particular asset didn't reach a certain number. I think it's too difficult to define. Whether Bitcoin...
At least he's not running for president.
Yeah, McAfee for president. Yeah, he made some good computer software, I think, but that's about it.
Again, on the subject of contactless, I mean, one of the things that the UK did, which seemed very honestly, it seemed super fast. Like it was within days of lockdown, they increased the contactless limit, and it happened like that, up to 45. What how do you think the UK payments community as a whole is being able to keep up with some of these changes, particularly when it comes to things like POS?
Well, I think the hardware manufacturer and the changing of the number, I think the schemes worked a lot on that to get that through as well, because it had to go through them. I think raising those, there's a lot more on the technology side than you imagine to just raise those limits like they did, and the fact that they did it in 2 days was phenomenal. But it has made a major impact in the volume of transactions that you can do. And the question is whether you want to lift the cap even higher on it going forward, or whether you are able to lift the cap by doubling it up with another form of authentication using your phone for certain individuals. So at the moment with Apple Pay, you can pay pretty much anything because you use your phone and it's contactless, and that is the thing that I think has grown in this marketplace. We have seen the ability of people to move on to the Apple Pays, the Samsung Pays, the Google Pays. There's been a growth in that because people don't have to touch anything but their own phone. And as I say, there is this paranoia in the marketplace on the ability to pick up this COVID-19, and I think that is playing on a lot of consumers. There's a fear factor. People are obviously, mental illness is growing in this, but partly that is the people are going to be much fearful in the future of touching anything. So we're going to have an issue, I think, in the next generations coming through that have grown up through this, how they're going to survive in normal society, where we're used to just picking up germs all the time and using that to create antibodies and live through it. I think we're still in the middle of it at the moment. It's too difficult to call.
We talked a little bit earlier about e-commerce and Amazon earlier. Amazon has, and I remember going around it in San Francisco. It was kind of a bit of a mecca. The Amazon Go store. Is technology the answer to this in terms of POS? That simple way, scan a QR code, pick up what you want, leave.
Well, I think there are a lot of solutions coming through on this. We've also got all this pin on glass that Visa and MasterCard are piloting now. So I think, as I say, the Apple Pay, Samsung Pay, Google Pay solutions on your phone, but equally the point of sale solutions on your phone, where they're going to allow you to do your PIN on your phone. People are more comfortable touching their own phones than they will be touching a terminal. And I think that's not going to change. And so I think there has been an acceleration of the ability to use contactless payments. And there will be an interaction, I think, between you tapping your card and you being able to put your PIN on your phone for higher value transactions. And I think once that becomes the norm, it'll make it a lot easier for businesses to run in that sort of contactless format. Because at the moment, if at £45, it's made it a lot easier for a lot of payments to go through. But if you could lift the lid completely and do a PIN on your phone to close it, I think that is going to be where people are going to go.
Regulation, obviously, lawyer by trade. Regulation is about, in some ways, protecting people, protecting the consumer. And consumer demand is very clearly not about touching as many pins as possible. There's obviously contactless limits. So do you think that this change in consumer behaviour, change in what the consumers want, do you think that's going to be a major driver behind some sort of future regulatory changes that we're going to see?
I think, as I say, a lot of the stuff I've been doing lately has been looking at what the future of payments, future of money is going to be and where that's going. I think if we take one step back a little bit, I think it was very fortuitous that PSD2 had strong customer authentication in it, because that whole strong customer authentication movement came in just before the shutdown and COVID, and people were getting used to the fact that they were getting one-time pins on their phones to approve transactions for online purchases. And I think probably the one of the reasons the growth of online payments has worked so well has been that we had SCA in the background. So people have been more used to doing the extra layer. And so probably had we not had SCA, we'd have seen a lot more fraud going through when we moved to this online payments growing at the rate it's grown. I think SCA, because it's in place now, has actually been a really good solution for the marketplace and has probably saved retailers vast amounts of fraud over this period. Obviously, you've got 3D Secure with MasterCard, one of the options there, but the whole SCA play for all payments online, I think, has been very good for the industry and came just at the right time, because it came in just before, so people were used to it, and I think it's been in play during the whole of lockdown. So I think it's important, and I think the continuation of SCA in the future and how they grow it and make it work better. And things like, as we said, biometric authentication on your device, anything that's on your own device, people are going to be comfortable with going forward. Anything outside that they have to touch, they won't. But again, with the stores you're talking about, the Amazon store, that was facial recognition as you walked in through the cameras, which was then basically cross-referenced to who you were. Again, those ones where there are contactless, so you can do contactless recognition. You can do that as part of the check-in when you go in the store, as part of the temperature check. I mean, nearly all stores now take a temperature check when you come in. As part of that temperature check, they can also do your facial recognition, or you could see how they could build quite a lot of that into your entrance into a physical merchant.
I want to talk a little bit around, regtech as a whole has entered the market, and there's some firms out there that are doing very nice, specific things to solve various elements of regulation. And we're actually, we're in the process of hopefully launching a lawtech channel. Where do you see regtech and lawtech? Where do you see that? Oh my God, I can't pronounce this word. This is the word you messaged me about, intersectionality.
I think the word you had was intersectionality, which is the weirdest word ever. I don't know.
Where does regtech cross with legal tech?
Yeah, and then the point is they are two very different things. So regtech is very much a payments industry or financial industry solution whereby parts of your onboarding process, parts of your monitoring, fraud monitoring, transaction monitoring, parts of your ability to comply with things like SCA and create your links in for open banking and things like that. That's a lot of that is the regtech, the tech that enables you to comply with those regulations. Law tech, on the other hand, is much more on how law firms can move forward and offer legal advice automated, where that advice doesn't need intervention of an actual person, because it's a standard sort of solution. So where the advice can be administered automatically without human intervention, that's where law tech comes in. So a lot of the law tech stuff is to do with like contracts and things like that, where you could create a virtual contracts which have certain forms in them that automatically create the contract for you to enter into. So you can say, oh, I'm this type of vendor, I need this type of contract, these are the amounts, you fill in the bits and it spits out the contract for you to use, and it can be online or another sort. Equally, in relation to things like buying properties or going through standard processes that occur in different types of law. So family law would have certain types of process for, I don't know, custody of child, divorce, things like that. Where those areas are effectively form filling, you can move those into a more law tech solution whereby people can fill in the variables and it will spit out an answer. There will always be a need for human intervention at some point, but law tech is more about automating law firms. Reg tech is more about taking the pain of regulation from regulated entities and automating it in a way in which they can do it at scale without the cost. So if you're monitoring, maybe you've got 10 customers with 10 bank accounts and you're monitoring those, you can probably do that physically. If you're monitoring 10 million accounts with 100 million customers, then you've got to do that automatically. Otherwise, you're not going to be able to deal with that volume unless you had 20 million people viewing screens 24/7 to do it.
So law tech's more to help the legal firms, the law firms themselves internally, and reg tech is to help the customers of the lawyers. I can't even begin to fathom some of the automation, and a lot of it is outside of the realms of the human brain of what some of this automation can do. Where do you see the usage of this level of automation within regulated industries like finance?
So I mean, one of the things that I'm very excited about, well, two things is the use of AI which can actually do a better job than humans can in spotting things that are going on. So in the whole area of fraud detection in relation to things like anti-money laundering, those areas, we as humans can look across stuff with all our experience and spot things that are going on. Where you've got machine learning, which is sort of one step towards full AI, you can start taking in information and using that information to assimilate new rules, and those new rules can then be matched to try and reduce fraud, reduce money laundering going on in your customers' actions. Now, when you take that to the next stage of AI, that's when the machine learning actually takes over and starts working out its own issues from what it's taken in. So it looks at all the machine learning, the information and the data, but then it starts working out its own system, and it can spot stuff that we couldn't even think about because it's got so much more capacity than the human brain. And so those solutions, when they start coming in, and there are companies out there delivering this, and the speed with which they can make those decisions when they look at what's going on as I say, for banks, the key thing once you've got a customer on board is making sure that every transaction they take isn't defrauding you and isn't money laundering predominantly, and that it gets to its destination and it's properly received by the right payee. The payer pays it, the payee receives it, or vice versa if you're the payee. You, as a bank, your main role in those payment transactions is making sure that happens properly and there's nothing that goes wrong on it. We're seeing a great growth now in the question of international settlements and international payments. So international transfers. So you've got the GPI system in SWIFT now, where before you could have an international transfer that might take a couple of weeks, and all you knew is the bank you put the money into had sent it, and you were waiting to see when it got to the bank, your customer that was receiving it at the other end in maybe Bolivia or whatever was receiving the funds. But you wouldn't necessarily
sending money to Bolivia.
Well, I don't know. You wouldn't see it go through the whole chain. Now with the GPI system that Swift's got, it's all, you actually track it, and what's being shown is, because when it gets to the next bank in the chain, and maybe there's 5 banks in the chain before it gets to the final bank. Before, each bank would receive it, sit on it, it would then move on. Now, because it's like a hot potato, as soon as the next bank receives it, they know that they're being looked at and say, we've got it. We can get rid of it, get it to the next, and move the hot potato. So bank transfers on the SWIFT system now on the GPI is going at much faster speed, because all the banks are under the spotlight when they receive the money until it gets to the destination. And so that's been a massive benefit, I think, to the speed of transmission of funds and the ability to make sure funds don't get lost in the process. So again, that took Swift years and years to build that whole platform, but now it's up and running. It's a great solution. There is another solution in relation to international settlements. So in each central bank, you have your gross settlement plan, the way in which the banks settle to each other. Now, Nick Ogden, through his new venture, is trying to do this on an international basis and trying to connect over 14,000 banks so that they all are part of the system and they all basically can pretty much real-time settle. It's in process. It's been going 3 years now. But again, that is something else which will help this whole process of being able to ensure that the system is kept together, so nothing's lost in it, and people are able to do these international settlements at a far greater speed than they ever were able to do in the past. So I think these technology innovations, and that is a big technology play. It's integrating all these banks, being able to check the bank's got the funds before the transfer, so that both sides know that at the point of transfer the monies are going through and all parties are covered by it. those sort of innovations are only being able to be possible because of the growth in the technology that we've had over these years. I'm just amazed at how things are moving at such a pace at the moment.
It sounds to me, and this harkens back to Expo, I want to say 2015, where you were in a boxing ring, and it was the argument as to whether innovation is driven by regulation or is being stifled by regulation.
I think in some respects, regulation does stifle innovation because of unintended consequences. I think the intention behind most of the regulation is to try to move the banking, the financial services sector forward in a positive way to create the best environment for competition and the best environment for the end users of those services. That is the intention. However, the timing of being able to draft, and legislation is such a difficult thing to draft, both at a European level for us in the past and in a local level afterwards, because in a European level, the directives have to be drafted in such a way that they can be implemented across multiple different countries. Then when they come into the country, you have to draft the legislation in such a way that it actually works and there is no ambiguity. And that's a very technical skill set that these technical draftsmen do when they're drafting the legislation, how you can remove ambiguity. But in that whole process, you're talking years, you're not talking days. Whereas the technology is ramping up exponentially in its ability to deliver new and innovative solutions. So the only thing the regulation can do is to try to create regulation that is non-specific in relation to the technology, but is more a overarching solution that will work irrespective of the means of delivery of that solution. And I think that's what's been so difficult. And sometimes because of that, trying to create something like that, you do get unintended consequences. And it's for the local countries when they bring those laws in and the regulators in those countries to try to fathom out, well, let's try and go back to what the intention was and do our best to interpret the regulation, the legislation in such a way that we get that proper solution, what people actually meant to do. And we're not continuing to perpetrate the unintended consequence. We're trying to avoid the unintended consequence.
Brilliant, excellent. Well, Robert, thank you so much for taking the time to speak with us today. Where is the best place to find out more about you other than available at all good bookstores now?
It's on Amazon, as we know, as is everything. The whole world is on Amazon these days. But as I say, I'm helping a few startups now, and there's some really exciting fintechs on the verge of launching, and I think you'll see a lot more innovation coming in this space. You would never think there was space for more innovation, but it never stops. The energy in this sector has just been amazing, and great to talk to you, Ali, and keep up the good work.